Hey guys, welcome back to Reserved Investments on YouTube. So before I begin this video, I do want to apologize to all my fans, supporters, patrons, people who do subscribe to this channel and actually get something out of it. I know my content has been lacking as of late. I just have everything going on right now in my personal life, business life, everything just going on. It blew up all at once. And I did not have time to put out what I consider quality content. You guys know if I'm going to put out a video, it has to at least meet a certain threshold of information that I put out for you guys to get something out of it. Otherwise, there's no point in me even doing this particular channel. I've said this many times. I do not do these videos for any type of ad revenue or money or anything of the sort. I do get some promotion out of it. People know that I exist. People know they can reach out to me at reservedinvestments@gmail.com if they want to use my consulting services. But overall, you are not expected to subscribe to my Patreon program or give me any type of money for me doing these type of videos. So with that being said, I just want to clear the air that yes, I am still putting out content. I know it's been quite slow as of late, but I am working to beef up efforts so that I can produce more videos that you guys all seem to enjoy and get something out of. At the end of the day, this is very important to me because I do truly live by a lot of the teachings that I put forth on this channel. And I can tell you, a lot of my mentors in the trade, other people that have been successful in the trade, have also adhered to these teachings and understand how the antiques and collectibles trade works versus that of traditional asset classes. And there's a lot of misunderstanding in the overall internet right now, especially with a lot of younger people that are coming into these markets. They don't understand the difference between investing, speculating, and the like, which is why in today's video, I'm going to go over a very good article that premiered on Bankrate that pretty much talks about the difference between investing versus speculating one last time before we go any further. This seems to be the crux where a lot of the Timmys, Kimmys, and Poindexters are really stuck when they analyze these markets. And when I say you would be better off investing in an S&P 500 index fund or a total stock market index fund or even bonds, even in certain cases, money market accounts, they look at me and they say, Sean, you don't understand. I'm going all in, diamond hands. This is my future. And it usually ends badly for these individuals. As you're going to see as we go along with more videos that I'm producing, I am going to do more videos on certain collecting categories that went from boom to bust, and in some cases, bust to boom. And I'm going to talk about what happened to a lot of the people that were players in that market. For instance, just to use this as an example, if you go back to the 1980s sports card boom, the baseball card bubble that occurred in the 1980s, dealers were making money hand over fist. This is my question to all you guys that tell me, hey, Sean, I'm investing in Pokemon. I'm investing in Magic the Gathering. Where are all of these sports card dealers back then that were making serious bank? Now, I know what you're going to say. Sean, that was back in the 80s. It was 40 years ago. If any of those guys were in their 40s or 50s, they would be either in their 80s, 90s, possibly deceased right now. And you are correct. But even Netflix, I think, did a documentary almost that talked exclusively about, I think he was a kid that his father ended up divorced, but his father, when he was in his childhood, he had a sports card shop and he dealt cards, and he finds a box of these particular sports cards in a closet or something, and he goes and wonders the value of these particular items and realizes that they're pretty much worthless. And if you look the way his father was living at that particular time, this is a Netflix documentary, I believe I saw it on. I forget the name of it. I really should be more prepared if I'm going to talk about documentaries in these videos. I do apologize. But he goes and he reconnects with his father, and he realizes, hey, my father's pretty much living in a one-bedroom apartment with a very simple life, and he made all this money, supposedly, back in the 1980s. What happened to it all? And this was something that I saw firsthand with my mentors in the trade that used to tell me a lot of these guys that are putting all this money in sports cards in the 1990s, we saw it with comic books, Beanie Babies, and the like, they were going to end up with nothing in their later years because all they're doing is putting all their money in speculative assets, thinking that that's going to be the panacea. That's their golden ticket to a worry-free financial-filled future. And in most cases, guys, it does not work that way. I've said this a million times on this channel. A lot of the content that you guys are getting beamed in your face, whether it's from Gary Vee or whether it's from some of these other guys where you're seeing on TikTok or YouTube, they're getting like 100,000 views, or maybe their channels with like 200, 300, 400,000 subscribers. You got to understand, most of these individuals had money and they had connections before they ever stepped foot into that marketplace. That's why people ask me, am I a fan of hustle culture? This answer is going to surprise you. I am not a fan of hustle culture. I look at hustle culture as desperation for a lot of people who do not have other opportunities. Even myself, I'm involved in certain businesses right now that I don't really talk about on this channel that are related to the antiques and collectibles trade. And believe it or not, I'm looking at divesting from a lot of those markets. It is no longer worth my time as I climb the proverbial rung of importance in my business career, in my financial life, in investing in other asset classes and markets. For instance, I'll just tell you this right now. I have a video on Lego that's going to be hitting this channel very soon. Lego is one such market that, aside from speculating in factory sealed box sets, I don't want to do anything going further with pieces, selling on Bricklink, parting out sets. It's too much work versus the reward I'm getting on the other end of the proverbial rainbow. So that is one business I am looking at divesting myself from literally within the next year. So within the next year, I am probably going to sell off, spin off that particular part of my business and let somebody else who wants to handle that particular headache going forward. I don't want any parts of that. It is not that profitable to me. Now, with that being said, getting back to the core crux of this video, today we're going to go over an article, and I'm going to put a link to this particular article in the video description below, entitled Investing versus Speculating. What's the difference? So I'm going to read this verbatim, and we're going to go through it. And if you are one of these individuals that is going after all these speculative assets that you probably don't even realize are speculative, this article is for you. So without further ado, this article premiered on August 24th, 2022, and it was written by Bob Hagel, or Hagely. I hope I'm saying that name right. The name, of course, will be in the article when I link it below. Okay, here we go. Past performance does not guarantee future results. You may have heard investment firms state this. In fact, the Securities and Exchange Commission requires them to say so. If we can't assume future results, wouldn't that mean investing is the same as speculating? It might seem that way, but investing and speculating are in fact different. And again, guys, this is something that the Timmys, Kimmys, and Poindexters that are putting out hype-driven content on YouTube do not seem to understand. And what's even worse in their assessment, everybody watching those videos now thinks that speculating is investing and investing is speculating. So, to understand the distinction, let's break down the difference between investors and speculators. It's important to know the difference so you don't put all your money in speculative assets while thinking you are investing. Sound familiar, Pokemon investors? Sound familiar, Lego investors? Sound familiar, comic book investors? Sound familiar, crypto guys? Sound familiar, gold bugs, silver bugs? You've got to understand this. This is Finance 101, guys. We have not even gotten out of the proverbial garage on this channel of talking about financial concepts that affect the antiques and collectibles trade. Because every time I put out a video talking about Pokemon, people come to me and they prove, Sean, you don't know what you're talking about. And I have to say, yes, I do. Here's all the facts. Here's the evidence. Then I get into a debate with one of these individuals, which leads me to create more videos on that same talking point, and I'm getting really sick of it. At some point, I got to cut the cord and say, okay, I've done how many videos on the difference between speculative assets versus investable assets? If you're not getting it at this point, it's not my problem. Please do not try to debate me in this realm. A lot of you guys are going to get slapped in the face with a stale donut. I keep telling you guys this. Going on and back to the article. What is investing? Investing is the process of exchanging money for assets that you can reasonably expect to increase in value over time, creating what is known as a capital gain. The focus on the performance of the underlying business rather than just the investment's price. Investors tend to focus on long-term incremental gains rather than big gains in just a few weeks or months. Let me repeat that last part. Investors tend to focus on long-term incremental gains rather than big gains in just a few weeks or months. That is why during the crypto craze, you had people, hey, Sean, you don't know what you're talking about. This is great. Last week, cryptocurrency Bitcoin was worth $30,000 a coin. Now we're up to 35. It's going to be worth 40, 45, and keep going. That is not the way you build wealth. You build wealth over the long term by investing in investable assets, not putting all your money in speculative bubbles and speculative assets and hoping and praying. That's why people lose big in a lot of these markets. Continuing with the article. In the U.S., investors buy stock in publicly traded companies listed on exchanges such as the New York Stock Exchange or the NASDAQ. These firms are required to publish quarterly earnings reports, allowing investors to evaluate the company's financial health and make informed investing decisions. Said another way, these are regulated markets. When you invest in traditional assets, securities, stocks, bonds, ETFs, mutual funds, you are investing in a regulated market. Know that investing in a regulated market does not guarantee you will make money. Understand that. It just means it's regulated. There are certain laws, certain regulations, obviously, and certain rules that have to be followed to make a fair and even playing field. And even then, as we all know, as we've seen with scandals in the news, we've seen with movies like Wall Street, Margin Call, there are certain individuals, certain firms that still have an upper hand. Said another way, yes, I do agree. When little Timmy, Kimmy, or Poindexter Jr. comes to me and says, Sean, don't you think the stock market is rigged? Or don't you think the overall economy is rigged against the average individual? Let me just state this. I'm not sounding biased in this. Politically, I'm a liberal progressive. Of course, I agree with that statement. But there's still ways you can make it work for yourself. One way is investing in index funds over the long term. Going back to the article, investing is not risk-free, but it tends to be a more conservative approach rooted in the tangible success of a company. It's not just about where the price of the asset will be in a few months. Now, we covered what is investing. Next part of this article, what is speculating? Speculating is buying assets with the hope of substantial gains, often in a very short time period. This is why I tell you guys, most investors agree, investing is usually 5 years or more. Speculation is 5 years or less, depending on the asset you are getting involved in. In some cases, it could be days. Some cases, it could be less than a year. Some cases, it could be just a few years. Long-term investing in most financial professionals' definition is 5 years or more. Speculating is usually less than 5 years. Speculators may enter and exit assets several times quickly. This is why when you guys tell me you're trading options or you're going after the latest meme stock, what is it that I tell you? You are speculating. You are not investing. You are not doing yourself any favors for the long term. And I assure you, even if you make money in those markets very quickly, you will either quickly spend it or you will frivolate it away on other speculative assets and thus remain poor because you do not know how to build true wealth. Speculative assets often have a significant risk of total loss in value, which speculators accept in return for a chance of high returns. Junk wax era sports cards, 1990s comic books, Beanie Babies, certain cryptocurrencies. All these assets are extremely speculative. You could add penny stocks to the mix as well, even non-established stocks of companies that have just propped up over the last few years. That's what really spurred the tech boom and tech bust, also known as the dot-com era, back in the early 2000s, that's what led it to crash. There were too many companies with unproven track records. eToys, Pets.com, Garden.com, all these stupid companies that propped up simply because they had a presence on the web. Stupid investors gave those companies a valuation almost in the tens of millions, hundreds of millions of dollars. And obviously they had no sales to back it up. It was just fugazi. And that's what led to that crash. Continuing, speculative assets often include unproven businesses, as I just stated, as well as penny stocks. Speculators tend to be hyper-focused on the price of an asset and less so on the underlying company's competitive position, future success, or productivity. Now, let's speak to that for a minute. That's because, I'm going to say it, I'm going to call some of you guys out, most speculators are not educated in business, finance, and economics. Just like most people wanting to argue with me about antiques and collectibles and investing in them are not educated in the antiques and collectibles trade. They think they are. They go on websites, they go on YouTube, they go on collecting forums, and all they do is repeat what everybody else tells them. And as a result, they think that they're intelligent. They think that they understand the risks in these markets. I can assure you, we can go all the way back to the 1960s. Yes, 1960s. And I can prove to you that's not so. Where are all of these collectible millionaires, multimillionaires, and in some cases, as some of you tell me, there's billionaires out there that invested solely in collectibles? Please show me these examples, because I've been in the antiques and collectibles trade now since the age of 12, and pretty much everybody I meet knows finance, economics, and business, as well as the antiques and collectibles trade. Those that are very successful and have net worths in the millions or above. Those are the things they have in common. Going back to the article, they may rely more on price movements and technical charts rather than on an analysis of the strengths of a business. Who here went to business school like me? You remember in business school when your teacher would do a SWOT analysis, strengths, weaknesses, opportunities, and threats? How many Timmys, Kimmys, and Poindexters going on YouTube telling you to invest in Pokemon or great at video games or comic books or Magic the Gathering have ever shown you a SWOT analysis? I guarantee you there are no videos out there of that type. And if there are, please feel free to email me and show me the SWOT analysis that an investor in Pokemon cards has done and put forth. I would love to review it. Matter of fact, I can tell you, I will literally take the time, watch the video in full, and give you my full analysis free of charge if somebody out there did a video like that, because people do not understand how these markets work. If they were to do a SWOT analysis, strengths, weaknesses, opportunities, threats, please feel free to Google it. I haven't covered SWOT analysis on this channel yet. It is coming. But please, feel free to look that up and get back to me and tell me how you think those markets should be analyzed in that manner. I guarantee you, a lot of you people are going to fall down the nostalgia hole, the rabbit hole, and give me all the stuff that you want to be true without looking at the facts. Speculators tend to be hyper-focused on the price of an asset and less so on the underlying company's competitive position, future success, or productivity, or in this space, the truth about how these collectibles are primed to perform over the short term and over the long term. Continuing, speculators often watch prices of their preferred asset by the day or even by the hour. You guys watch Pawn Stars? There was an excellent episode of Pawn Stars, which was made to be hilarious, where Chum Lee one time starts investing in the stock market. And the whole episode is set up. He keeps checking his phone. He keeps checking his account balance, telling Rick, who owns the pawn shop, that he's invested in the stock market and he has to watch his investments. At the end of the episode, you learn that he only put $50 into the stock market. And it's just made to bring up these emotions of how, I hate to say this, less than educated people operate in the stock market. Even me, I have a portfolio in the mid 6 digits attached to the overall stock market. I do not check my portfolio on a daily basis. I don't need to. I don't care if the market goes up 1,000 points. I don't care if it drops 1,000 points. In most cases, I know what I'm invested in. I know what I need to do. I know what my time frames are. I know what my risk tolerance is. And I understand risk versus reward, guys. People who are less educated in these markets, they're the ones that tend to watch their investment on an hourly, a daily, a weekly, a monthly cycle. To be fair, you should keep an eye on it, but you shouldn't be obsessed with it. There's a lot of people that reach out to me and they tell me, hey, Sean, I spend 10 hours a week in the antiques and collectibles trade doing price research. Now, I'm a consultant in the trade. For me, yes, I do roughly 10 hours, sometimes more than that a week in price history, looking up, staying abreast of these markets. But some of you tell me you have $20,000 invested in Pokemon cards. If you're really that worried about incremental small price movements, perhaps you shouldn't have $20,000 invested in Pokemon cards. Now, I don't know what your net worth is, to use as an example. If you have like $250,000 net worth, I'm going to be honest, $20,000 in Pokemon cards, it can be excessive to some, but it's not a lot. That being said, though, if it bothers you that you got to check those prices on a regular basis, perhaps you're too involved with that investment. That's why I tell you guys, if you get a total stock market index fund, S&P 500 index fund, work with a financial advisor, set up a portfolio, guess what? Most likely, you're not going to have that much of an active role in that portfolio. It's going to be passive. And that's really what you want because it frees up your time. I've said this before. Me with six figures, mid six figures in the stock market, I don't need to check my portfolios daily. I'm not that concerned. Some of you guys are overly involved in these investments or these speculative assets that you have that you think are investments, that it really takes a lot of time out of your day. Some of you need to step back a little and just understand how markets work and operate and use that understanding to basically tell yourself, hey, I'm confident in this market. I know how it's going to go. That being said, I can pull back a little. I don't have to be in such control. Speculators often watch prices of their preferred asset by the day or even by the hour. We covered that. These assets can be highly volatile, so this close attention can be stressful for speculators. Now, here's where the article gets really good. Now that we're 22 minutes into this video, most people have shut the video off by now. They don't want to hear me talk about this. Examples of investments versus examples of speculation. This is where it gets good. Examples of investments. Let's start there. Many types of investments are best for long-term appreciation and don't require short-term speculation. Those speculators may jump into these markets and create speculative market bubbles, as we saw in 2006 up through 2008 with real estate, as we've seen during the dot-com era, the boom, then the bust. There were a lot of speculators at the helm. We're seeing it now in cryptocurrency, certain collectible asset classes, even to a certain degree in the stock market. Meme stocks, very big with this. There's a lot of people think they're going to make money overnight. They want to get the GameStop stock. They want to get AMC. They want to try to play their luck at Bed Bath & Beyond. Yeah, good luck to you guys. Okay? I get in those markets and I get out. I don't stay in them. I don't follow them. I make my money and I get out. And I only devote a very small portion of my portfolio to speculative stocks like that. Money that I'm comfortable losing if I would lose it. So let me give you some examples of true, tired, and tested investments. High quality stocks. Stocks allow you to buy a piece of ownership in a publicly traded company. In the context of investments, this generally refers to blue chip stocks from established businesses. It can also include investments such as stock ETFs and mutual funds. Bonds. A bond is a form of debt that allows organizations to fund their operations. In return, the bonds pay a moderate rate of interest. Investors typically favor government bonds, corporate bonds, plus bond ETFs, exchange-traded funds. If you don't know what an ETF is, please look it up, and mutual funds. Real estate. Real estate is one of the oldest forms of investment and remains popular today. While real estate is not without risk, it tends to be a very strong and, in most cases, active investment. Certificates of deposit. CDs. CDs bear some resemblance to bonds, but are primarily issued by banks and credit unions. CDs pay a modest rate of interest and are typically FDIC insured, meaning they're as risk-free as an investment gets. Annuities. Annuities can be thought of as a form of retirement insurance. Full disclosure, I do not like annuities. I do not invest in them. I am not a fan of this asset class. You pay either a flat amount upfront or over time, and in return receive a lump sum or regular payments in the future. I do know certain retirees are attracted to annuities. I was never a fan of them. We're not going to get into those reasons in this particular video. Now, all those things that I just mentioned are proven investments. They are examples of investment products. Now let's talk about speculative investments. And believe it or not, Collectibles is listed on this list. So is artwork. So are a lot of things that you guys watch this channel for. Examples of speculative investments. These investments, while often popular, are also speculative in nature. Generally, you should be prepared to lose your entire investment if you put money into them. Certain cryptocurrencies, certain collectibles that went belly up. You gotta understand, guys, there are risks in all these markets. No matter how safe or popular you think the item is, if it does not pay a cash flow, a dividend, an interest payment, it is probably most likely high risk in a lot of cases. So let's go with the first item on this list, cryptocurrencies. Cryptocurrency has its advantages, such as easy currency exchange and transaction speed. While some cryptocurrency investors have made millions, many more have lost large sums of money. Full record, I am not a fan of cryptocurrencies. You guys that have been with me since the beginning, you know that. I talk about this often on this channel. Cryptocurrencies are inherently risky. If you start talking about cryptocurrencies and the risks of investing with them with someone, and they bring up, well, Sean, what about that dollar? That dollar's run by the Fed. That's a corrupt system. It's a Ponzi scheme. Immediately walk away. That person does not understand economics. That person is a pseudo-economic economist who learned his bullshit conspiracy theories from YouTube and among men who have failed financially and are extremely bitter in their old age. They will often quote conspiracy theories outright or tell you to go read the book, The Creature from Jekyll Island. Yes, I am educated in finance. And yes, I am critical of the Fed. But even I recognize the Fed is a necessary evil. As a result, you have to learn to live with the Fed and still be able to profit from it. Cryptocurrency conspiracy theorists tout a lot of incorrect information. And they really manage to get a hold of the gullible and the very desperate. And those are the people that are really putting all their money into these markets. There's nothing wrong, guys. I want to just clarify here. There's nothing wrong with being suspicious of the Fed. There's nothing wrong with being suspicious of the federal government. But when it starts to take over your life, where you make bad investment decisions as a result of that, or you don't believe in the long-term validity of the United States, of the world economy, of investing in stocks in the financial markets, that's where you've crossed over to a dangerous mentality, where you're most likely going to end up like those people that you are interacting with who are old, very angry, and very upset with the system by and large. And when I encounter somebody like that, I immediately pull back and I try not to engage that individual. Because I've said this before, there's a lot of toxic people online. There's a lot of toxic people giving other people bad advice, especially in the dating world, especially in the investing world, especially in the collectibles world. You need to learn to recognize this. It's no different than the dude who gets involved with a chick who has borderline personality disorder or narcissistic personality disorder. Now he thinks all women are like that. All women are not like that. Again, you have to look at your own, how do I want to say this? Your own activity in that relationship. If you get into a relationship with a toxic person, you got to understand that you yourself obviously have toxic traits. You got into a relationship with someone who is not emotionally healthy. Water attracts its own level. Like attracts like, healthy attracts healthy, unhealthy attracts unhealthy. It is almost the same, honestly, with investing. There's a lot of people that are drawn to these alternate asset classes, and they put everything they have in it. And if you get talking with them, there's usually a reason behind it that you can kind of unmask. Either they had an issue with the IRS, they got in trouble somehow, and the government seized their money for doing something wrong, justified or unjustified, or they got into a divorce, or they got into a situation where now they're paying child support or back payments on something. There is usually a reason. With that being said, let's go to the next example of a speculative investment. Commodities. Commodities are goods that are non-branded, such as oil, gold, silver, agricultural goods such as corn and soybeans, among many others. Now, you notice I did not include collectibles yet. Collectibles is on that list. We're getting to that. Commodities can be a good diversification hedge. You know, I'm very much hated amongst the gold community. A lot of gold bugs, a lot of silver bugs, they hate me because I tell people, do not put all your money in gold and silver. You diversify into it if that's one of the asset classes that you choose. Now, when I say diversify, I am talking literally 3 to 5% of your portfolio. And even in most cases, that's too much because a lot of you guys, aside from investing in gold, silver, crypto, collectibles, you have too much in alternate asset classes. So please, if you are investing in commodities, do it in moderation. It should not be a full course meal for your portfolio. Next, let's talk about options. I have a lot of people coming to me, Sean, I'm on the Wall Street Bets forum, and they start talking to me about options trading, and I go, hey, okay, very interesting. I'm game. I'll talk to you about this. And I get talking with them, and it becomes very apparent that these people have no basics in understanding finance. These people are not financially established. I'm here to tell you, if you are not financially established, why are you trading in options? Trading in options is very risky. Now, if you don't know what options are simply contracts that allow you to buy or sell a stock by a specific time for a specific price. Traders can buy options contracts in order to speculate on price movements of different types of assets. As you can imagine, options trading is inherently risky. Even me, I'm educated in finance. I do very little with options. Let me say that again. I myself do very little with options. That's why when somebody comes to me and says, Sean, what do you think about this? Sean, I'm shorting this particular stock. Sean, I'm going all in on this with options. What's your take? I have to tell them, what's your background? Tell me about yourself. Have you done this before? What's your net worth? How much money have you made in the market in the last 10 years? How much money have you lost? What do you do for a living? What type of knowledge do you have about this? And most of these people, they don't want to carry the discussion any further. And I know why. Because they went in they went in an investing forum and they got this information and they think they're going to become a millionaire overnight. Can you make money in options? Yes. Vast majority of people end up losing money to the point where they end up owing the brokerage company or the service they're using more than what they originally had in their account. Options trading is inherently risky and should only be done by people who know what they are doing, not the average retail investor. Next, let's talk about artwork. Artwork, you guys know, if you watch this channel, artwork's one of the top tier collecting categories I talk about. It's on the mature and sophisticated side of the trade. Artwork, coins, currency, historical documents, collectible first edition books, firearms, edged weapons, all that stuff. So here's what it says. Artwork is a popular investment in some circles because it has the potential to rapidly increase in price. This is true due to supply versus demand. If it's a top tier modern master or a master artist and the supply is limited, obviously billionaires who want to own that particular asset class, they will compete in the open market. And that's why you see certain paintings sell for 10, 20, 30, 40, 50, 100 million or more at auction. I know, boggles the mind. However, artists and artistic styles can rise and fall in popularity, causing a once valuable piece of artwork to draw little interest from buyers. And this is a market I would love to do more videos on because, believe it or not, I do actually have a list I can go through and I can tell you artists that sold for a certain amount that people were really gung-ho on and now the artwork dropped 50, 60, in some cases 70% in value. And the person holding that piece, if they go to sell it to the market, they're going to take a substantial loss. It's not all gains, guys. That's why I get so mad at some of these companies, like the fractional share companies like Masterworks or some of these others. You need to invest in art. The average person watching this video, even if you're at my level, even if you're at my above level, you don't need any exposure to art in most cases. Let art be an investment for the people who have hundreds of millions of dollars to risk. I'm dead serious. The average person should not be investing in art. You need to get yourself financially established. You need to get yourself to a point where you don't have to worry about bills, where you don't have to worry about money. You should not be putting money in attempting to buy artwork through a fractional share company like Masterworks, or going to the market yourself and trying to buy a $10,000, $20,000, $30,000 painting, hoping that it goes to 100 grand, 200 grand or more. It's just insane. Last on this list, collectibles, guys. Collectibles can be almost anything that people like to collect, such as trading cards, toys, comic books, and the like. Similar to artwork, interest in these can wax and wane rather quickly, as I talk about in this channel. Look at what's happening right now with Great at Video Games. Look at what's happening in some of these markets. Comic books. A lot of you guys were arguing with me. Sean, you don't understand. My Hulk 181 that's now worth $21,000, it's going to keep going up in value. Well, right now, I guarantee you, in near mint condition, you're not going to get $21,000 for an Incredible Hulk 181. That was primo market during the pandemic. There's been a minor correction that is still accelerating in that market that is affecting a lot of these more common keys. Do a price history of Amazing Spider-Man 300 near mint condition. Why do you think I tell you guys, do not invest in Amazing Spider-Man 300? There's too many out there. It is not the type of item you're going to want in your portfolio if you are investing in that said asset class. Now, if you're somebody, you're financially established, you have money to spend, and you come to me and you go, Sean, I really love Venom. I really like Todd McFarlane. He did a great job with the cover of that and the artwork in that book. I really want to own a copy at 9.8. You are in a different position than somebody who is trying to invest in that market. Remember, guys, I'm not here to hold your hand and talk to you about the first time you played Nintendo, or how your eyes lit up as a kid when you were given a Star Wars figure as a child, or the first time that you discovered Charizards, Planewalkers, and Marios. That's not what we do here. This is a collectible finance channel. So do you guys see, are you beginning to understand the differences between investing and speculating, and why people who make money in these markets over the long term, they understand these basics? The Timmys, Kimmys, and Poindexters that want to throw eggs at me and tell me I don't know what I'm talking about, I don't know what I'm doing, who are recording videos out of their parents' bedrooms or basements in certain cases, this is the stuff you've got to learn. With that being said, I'm going to link this particular article in the video description below. Take your time to read it. I already read it to you, but if you want to analyze it further, go right ahead. Thanks for watching. I value your feedback and comments, and I tried to keep this video under 30 minutes. I didn't do it. It's now going to be probably 39 minutes by the time I end this. I wish you all well, and thank you so much for considering subscribing to Reserved Investments.